employment in South Africa slumped yet again this month by 0.4% year on year. This according to the Adcorp Employment Index. We now unpack that report with Loane Sharp, Labour Analyst at Adcorp. Thanks so much, Loane, for joining us once again this month. What's your assessment of this deteriorating situation we find ourselves in?
I think there's several things that can be said about it. The first is that the strikes we are observing haven't been helpful. Mining and manufacturing employment slumped significantly during July, and our assessment of that situation is that that results from cancellations of export contracts in the mining and manufacturing sector that have been related to strike activity and production lost. But at the same time, I think another thing that can be said about unemployment is it's not a monthly phenomenon. We're now in the third consecutive slumping month. We've made no advances really since the low level of the recessionary period. The economy is now decisively in a period of jobless growth. Economic recovery is well underway in sectors like retail, manufacturing, even electricity and gas, finance. But employment is showing, if anything, job losses.
And a pretty scary outlook moving forward as well. I mean, we've got the South African economy predicted to shed a further 468,000 jobs in the remaining months of 2011 and then 2012. And that's half of the number of jobs that were shed during the recession. So let's explore some of the factors you see coming to bear moving forward, because it's that worsening outlook that's even more, scary or frightening at this stage of the game.
Absolutely. I mean, there are going to be huge political and social consequences for that scale of unemployment. How we arrive at that figure is we take a look at labour productivity trends and we compare those trends to settlements of wages. And there's been such a rising gap between wage increases at the level of approximately 8%, 8 to 8.9%. And at the same time, declining productivity. Labour productivity is currently falling at about 4% per annum. So that disconnect will lead employers to shed quite a significant number of jobs, as it has led them to shed jobs in the last 18 months. So there's no improvement in prospect for labour productivity, unfortunately.
Especially, when you're taking that kind of trend into consideration here, businesses are looking at a higher input cost base, and they're looking at declining productivity, leading them more towards, the technical expertise and machines as opposed to humans, being employed by the workforce. How do you see that coming to bear on the South African workforce?
Businesses have a budget, just like government has a budget. And I sometimes think government and trade unions believe businesses have endless supplies of money. There is a budget. And if sales slump or productivity slumps and sales targets are not met, the only way to adjust your cost really is to lay off staff, and that's exactly the phenomenon we've been seeing for the last 18 months. Here and there have been some positive months. Here and there have been some interesting anomalies. But the general trend is definitely for employment to be in decline.
Of course, we've got government that holds a budget too, and that very much reliant on the kind of economic growth we're seeing and the kind of earnings that come through from the private sector. For now, we've got still government standing in contrast and employing more so than anything else. We saw employment continuing to rise by 1.4% within that public space. Do you see that as a figure coming under threat?
No, I don't think so. I mean, government employment is expanding, and what that is a symptom of or a predictor of is the kind of bureaucracy and red tape that we're going to see in government. The more government employees that are added to the wage bill, the more promotions to managerial positions, the more the wage bill expands. So we're looking at a government overshooting on its wage budget for the year in total. So there's a lot more to these unemployment figures than I think meets the eye initially, and certainly government will have to live within its means, but it's going to overshoot its wage budget, its payroll expenses for this year.
Well, overshooting, let's take a look then at the kind of labour environment we are in amidst at this stage, because, I mean, you touched on labour laws and it being restrictive. We've got a new package of labour laws being, envisaged. What are you expecting on that front when it comes to labour relations in South Africa?
Well, the irony is that labour relations are becoming more and more complex. They're becoming more and more difficult. The 4 amendments to various labour laws that are currently under discussion at NEDLAC, I can tell you from within NEDLAC that there is total chaos and confusion. COSATU, who is one of the big participants in the negotiations at NEDLAC, is privately calling for the regulation of labour brokers, but in public on the streets they're calling for a ban. Someone's going to be frustrated somewhere. And who knows what violence and unrest that will lead to in the end. Strikes, no doubt, perhaps, and there are already mass strikes threatened for the rest of the year. Labour laws and regulations are the cause of this problem. At best, we can say that the Labour Relations Act of 1995 had its use at that time, but it has completely failed at this time. 17 years into our democracy, I think we need to go back to the drawing board, have a total review of labour legislation and start from scratch. But it starts with our political priorities.
Absolutely.
Are we happy to have existing workers living more luxuriously at the expense of 8.5 million people who can't find work? Or are we desperate to get those people into jobs?